Investing. So you've heard a lot about investing, about how it can help you build wealth, achieve some of those financial goals that are important to you, and help you achieve financial freedom. And basically, we all want to make a lot of money. So you've heard that investing can help you do that, and you're ready to get started. Maybe you've even saved some money, or you've even tried investing in the past. Well, I'm glad you came across this video, because what I'm about to share with you would ensure that you are a profitable investor and you don't do damage to your finances due to some of the huge mistakes that newbie investors make on their investment journey. But first, let's talk about why investing is important. Why is it important for you to actually invest? Why not just tuck your money away under your mattress or lock it somewhere where it is safe? Why invest at all and expose yourself to the risk that is associated with investing? Investing is the most significant tool you can use to protect the value of your money against inflation. If you think back to like 5 years ago, the amount you used to buy, say, your coffee is not the same amount you're buying it now. That is due to inflation. And what happens is, if you had saved 1,000 naira, $1,000 back then, it won't be able to buy the same thing you would have been able to buy 5 years ago, because your money has lost some value. With this, there's really nothing you can do with it personally. It is left to our government and policymakers to do their best to curb inflation. But there is something you can do in your own personal finance to protect yourself against inflation. And that is why we emphasize, myself and many other financial experts emphasize the importance of investing. It is the only way you can grow your money. Savings won't grow your money. With savings, your money will lose value, like we've explained, due to inflation and currency devaluation. But with investing, you can grow your money. So everybody should invest, honestly. Now that we understand the importance of investing, what are some of the significant mistakes or errors that newbies like you might make that would end up making investment a bad thing for your finances? I have heard stories of people losing everything just because of a bad investment that they made, or losing their financial stability, entering into major debt just because they got it wrong. There are always two categories of investors: those that do it and really succeed at it, and those that do it and it takes their finances really down or destroy their finances. What you're about to learn in this video is one of the key things that will determine which category you fall into. And trust me, this is something I wish somebody sat down to teach me over 10 years ago when I made my first investment. So let's get into it. There is a fundamental principle that you must understand on your investment journey, and that is, the higher the potential reward, the higher the risk. I'm going to repeat that again. The higher the potential reward, the higher the risk. So let me explain. When a lot of investors come across an investment opportunity, newbie investors especially, they tend to focus all their energy and all their excitement on the potential reward they can possibly get from that investment. And they completely ignore the risk associated with it. But here is the thing. Reward and risk are like siblings when it comes to investing. You cannot want to make money from investment and not want to take up some risk. And the higher the risk you're willing to take, the higher the potential reward you're going to get for it. But people make the mistake of thinking that I can get a lot of reward by investing into this investment opportunity and really not a lot of risk, just because they've minimized the risk in their minds. For example, around 2020 to like 2022, there was a lot of buzz around cryptocurrency. Your 90-year-old or 70-year-old grandpa and grandma wanted to invest in cryptocurrency because they saw people making a lot of money, a boatload of money from cryptocurrency. And I've personally heard stories of people that even went to the bank to borrow money to invest into cryptocurrency, and they suffered for it. Why? A lot of people lost money heavily in the cryptocurrency market because they don't understand this fundamental principle. An asset that can grow your money from $10 to $10,000 in about 3 days can also bankrupt you if you invest much more into it. So a lot of people were just putting money into cryptocurrency, focusing only on the potential reward and ignoring the risk associated with it. It's to the extent that some people took out loans, took out their pension, just made crazy financial decisions because they were so focused on the potential reward. So let's take this conversation about risk and your potential reward further. And we're going to use it to categorize the different types of investment out there into three. Well, this is the three categories that any financial expert in the world will tell you that you must understand. The first one is the low risk investment bracket. These are investment opportunities that come with little risk to you. And those are bonds, we have treasury bills, we have mutual funds, money market fund, all that fall under low risk investment. And you will see that with low risk investments, their returns are not usually high. And that is why a lot of investors ignore them. They don't want an asset that will give them 5% per annum or 2% per annum, 3% per annum. That doesn't sound interesting enough. They want something that can give them maybe 30%, 40%, something juicy, right? And because of that, they tend to push their money into opportunities that come with higher risk because, like I said, the focus is on the higher potential reward. But for you, as somebody watching this video, you should understand that if you are a conservative investor, you look at your finances and you feel like, I cannot afford to take so much more risk than this right now. You might want to focus all your attention on low risk investment opportunity, especially if you don't want the heartache or you don't want any headache when it comes to your investment. You just want something that will consistently compound and grow your money. The low risk investment category is where you should be looking at. Now we have the medium risk. This is where we have things like real estate, we have stocks, and this category is much more interesting because there is a potential for you to earn higher interest from your investment in this asset class. So you will see that when you are in stocks, your stock can go from $20 to like $100 in a year, and you make a lot of money from that. It's possible, I've seen it happen, or go from $100 to $1,000 in like space of 8 to 12 months, like we've seen with Nvidia in recent times. So it can really be interesting in the stock market as well as the real estate market. But remember, they come with higher level of risk, at least higher than the low risk investment, because here with stocks and real estate, nobody is going to be giving you a guarantee that your money would do 50 or 10% in a year. Your money can do 100% in a year. It can also do minus 40% in a year. And that is the truth about it. Nobody is bearing that risk for you. You have to take up the entire risk as the investor. Now, with the high risk investment brackets, which is where we have cryptocurrency, forex trading, futures trading, options, and the likes, you can possibly already guess. They can give you so much more money, but they come with higher risk. There is a higher possibility of you losing your money when you invest in this type of asset. So this is why when a lot of people were borrowing money to invest in the cryptocurrency market, it was just such a wrong move to make. For me personally, as an investor, I only invest what I can afford to lose into high risk investment opportunities. Now that you understand the role that risk plays on your investment journey, there are two questions you must always ask yourself before you drop your cash or you drop your money into any investment opportunity. The first question should be, what is the risk associated with this investment? And number two, can my finances afford to bear this risk? Can I afford to lose this money? How much exposure do I have? I want you to present that question in different ways in your mind until you are able to come up with a clear yes or no. Now, if your answer is no and you still really want to invest in that opportunity, then what I will probably do is to reduce my exposure to that investment opportunity. Like I said, say you have $200 to invest and you can't afford to lose that $200. And by the time you looked at this investment opportunity, it looks like a high risk investment. What you can do is maybe invest a percentage of your $200 into the high risk, a percentage that you can afford to lose. Say you can afford to lose $20. you can just use that and put into the investment and use the remaining 180 and distribute it across other conservative form of investment opportunities. I hope you have learned so much from this video. If you found this video helpful, don't forget to subscribe and share with your friend. This is something I wish somebody told me or taught to me over 10 years ago when I made my first investment. Because trust me, it would have saved me a lot of tears and worries over the years.